is secretly controlling the lifeblood of the global economy? Currency Wars unveils the financial world with a shocking perspective, claiming a centuries-long monetary conspiracy from the Rothschild family to the Federal Reserve. Why did Song Hongbing's book spark global debates and controversies? Let's dive into the world of currency wars to explore its historical truths, economic logic, and modern insights. The Era of Financial Awakening. In 2007, Currency Wars was published in China, just before the global financial crisis, as the subprime crisis began to emerge. Song Hongbing, a former Wall Street financier, blends complex financial history with conspiracy theories in accessible prose, captivating countless readers. The book claims the global financial system isn't a natural evolution but is controlled by a few financial elites, with the Rothschild family, central banks, and financial crises as key evidence. Since the late Qing dynasty, China's understanding of money and finance has undergone drastic changes. The Opium Wars exposed the Qing government's fiscal weaknesses, and the self-strengthening movement's attempt to adopt Western banking failed to reverse national decline. In the early 20th century, the Republic of China faced warlord chaos and foreign debt, with currency issuance becoming a pawn in great power games. Currency wars awakened Chinese interest in financial sovereignty against this historical backdrop. Song Hongbing writes, "Money is the blood of the economy. Whoever controls money controls the world." The 2008 financial crisis fueled the book's popularity. The collapse of Lehman Brothers and global stock market crashes led people to question the stability of the modern financial system. The book's criticism of the Federal Reserve resonated with public distrust of Wall Street. During this time, China's rapid economic growth intertwined public desire for wealth with fears of external financial threats, making the book a bestseller with over 2 million copies sold. Do its claims hold up? What psychological needs drive its popularity? The answers lie in its core arguments, historical impact, and real-world implications. 2. Core arguments of currency wars. Currency Wars weaves a narrative of financial elites manipulating the global economy through historical events. Its core arguments focus on 3 stages: the rise of the Rothschild family, the establishment of central banks, and the orchestration of financial crises. Let's examine the logic and truth behind these claims. The rise of the Rothschild family, the dawn of a financial empire. Song Hongbing argues that the Rothschild family, through currency exchange and war financing in the 18th century, laid the foundation for global financial dominance. The book describes how founder Mayer Rothschild capitalized on the Napoleonic Wars, using intelligence networks and financial maneuvers to amass wealth. Song writes, "The Rothschilds' rise marked the shift of financial power from royalty to bankers." This view is partly grounded in history. The Rothschilds did rise in the late 18th century through transnational banking, playing a key role in financing wars in Britain, France, and beyond. For instance, after the 1815 Battle of Waterloo, Nathan Rothschild profited heavily in the London stock market by leveraging early knowledge of the outcome. The family's 5 brothers, stationed across Europe's major cities, built an efficient financial network, pioneering modern banking. However, Song's claim that the family controlled Europe's economy lacks direct evidence and is exaggerated. Historian Niall Ferguson, in the House of Rothschild, argues their success stemmed from business acumen and information advantages, not conspiracy. By the mid-19th century, the family's wealth was dispersed, and their influence was not as omnipotent as the book suggests. 2. The establishment of central banks, institutionalizing financial power. Currency wars portray central banks, especially the Federal Reserve, as tools of financial elites. Song claims the Fed's 1913 creation was a milestone for bankers like Morgan and Rockefeller to control the U.S. economy. He writes, "The Fed isn't a government institution but a consortium of private banks, with its currency issuance power dictating America's fate." This view has sparked heated debate. The Fed comprises 12 regional reserve banks with commercial bank shareholders, but its policies are overseen by Congress and the President, making full control by a single group unlikely. Economist Milton Friedman, in A Monetary History of the United States, attributes the Fed's errors, like the tight policies before the 1929 Depression, to misjudgments, not conspiracies. Yet Song's critique of the Fed's private aspects raises valid questions about currency issuance transparency. While the Fed's independence shields it from political interference, its opaque decision-making fuels public skepticism. For example, during the 2008 crisis, the Fed's secretive bailouts of certain banks were criticized as unfair. Similarly, the Bank of England's private model in the 18th century sparked debate until its nationalization in 1946. 3. Orchestrating financial crises, a conspiracy of hidden hands. Currency Wars claims financial crises are engineered by bankers to profit. It links events like the 1929 Depression, the 1997 Asian financial crisis, and even GF's assassination to financial elite conspiracies. Song writes, "Every crisis is a transfer of wealth from the masses to the few." This is the book's most controversial claim. The 1929 Depression saw some speculators profit from the crash, but scholars attribute it to policy errors, over-leveraging, and weak regulation, not a single conspiracy. The link between GF's assassination and bankers lacks evidence and is widely criticized as far-fetched. Still, Song's analysis highlights wealth inequality and financial system vulnerabilities. In the 2008 crisis, Goldman Sachs profited from complex derivatives while ordinary people suffered, echoing the book's concerns about financial inequity. In the 1997 Asian crisis, George Soros's quantum fund profited by shorting the Thai baht, raising fears about the destructive power of international capital. 3. Multidimensional critique and reflection. While Currency Wars is compelling, its exaggerated narratives and conspiracy leanings have drawn criticism. Let's evaluate it through historical accuracy, economic logic, and social impact. 1. Historical accuracy, the line between truth and exaggeration. The book draws on historical events but often lacks solid evidence for its claims. For instance, portraying the Rothschilds as global economic puppeteers overstates their influence, which was largely limited to 19th century European banking, as Niall Ferguson notes. The link between GF's assassination and bankers relies on speculation, with no credible documentation. Song's interpretation of the 1863 U.S. National Banking Act exaggerates bankers' control, ignoring wartime fiscal needs. Yet Song's historical overview has merit, highlighting finance's pivotal role in events like Napoleonic War financing or U.S. Civil War bonds. For example, during the Civil War, Lincoln's government issued greenbacks to bypass bankers' high-interest loans, showing efforts at financial autonomy. The issue is Song's tendency to reduce complex history to conspiracy, ignoring broader economic and social factors. The 1929 Depression wasn't just financial speculation, but also tied to post-war economic imbalances and rigid gold standards. 2. Economic logic, the gold standard vs. modern currency debate. Currency Wars advocates returning to the gold standard, arguing modern fiat money enables elite manipulation. Song writes, "The gold standard is a natural constraint on money. Fiat currency is the banker's game." This view has sparked economic debate. The gold standard limits currency overissuance but is impractical for modern economies. Economist Paul Krugman, in The Return of Depression Economics, notes the gold standard worsened the 1929 Depression by tightening money supply. After Nixon ended the gold standard in 1971, fiat money allowed central banks to use tools like quantitative easing to tackle crises like 2008. However, Song's critique of fiat money highlights risks of overissuance. In 2020, massive money printing during the pandemic led to 2022's global inflation surge, raising living costs for ordinary people. Venezuela's hyperinflation, reaching 1.3 million% in 2018, is an extreme case of fiat money mismanagement. 3. Social impact, nationalism and conspiracy psychology. The book's popularity stems partly from its appeal to nationalist sentiments. It portrays China as a victim of Western financial hegemony, urging stronger financial sovereignty. Song writes, "China must control its monetary destiny, or it will forever be at others' mercy." This narrative resonated after the 2008 crisis, aligning with Chinese skepticism of Western economic models and boosting national pride. However, it has downsides, with some criticizing the book's depiction of the Rothschilds as echoing anti-Semitic conspiracy tropes, fueling unhealthy nationalism. Psychologist Daniel Kahneman, in Thinking, Fast and Slow, explains that conspiracy theories thrive because people seek simple explanations for complex realities. Currency wars tapped into this psychology, especially during economic uncertainty, offering an emotional outlet. Post-2008, distrust in bankers surged globally, with similar conspiracy-themed books gaining traction in Russia, Brazil, and beyond. 4. Global impact and case studies. Currency wars not only captivated China but also shaped global perceptions of the financial system. Let's explore 4 case studies to examine its real-world relevance and controversies. 1. The 1929 Great Depression, Echoes of Financial Crises. Song depicts the 1929 Depression as a banker-orchestrated wealth grab, claiming the Fed deliberately tightened money policy to trigger the stock market crash. While this lacks direct evidence, the Depression exposed financial system flaws. Historian Charles Kindleberger, in Manias, Panics, and Crashes, attributes the crisis to excessive speculation, weak banking systems, and trade imbalances. The Fed's tight policies worsened the crisis, but this was likely a misjudgment, not a plot. Still, Song's narrative highlights wealth transfers during crises. For example, John D. Rockefeller bought assets cheaply post-crash, consolidating his family's wealth. Similar patterns appeared in 2008, with firms like Goldman Sachs profiting amid public losses, fueling outrage. 2. The 1997 Asian financial crisis, the impact of global capital. The book claims the 1997 Asian crisis was a Western financial victory, with George Soros's quantum fund shorting the Thai baht to trigger a regional collapse. Song writes, "The Asian crisis was another triumph of Western financial hegemony." This has some truth. Soros's fund accelerated Thailand's currency devaluation, spreading the crisis to Indonesia and South Korea. However, the crisis's roots were complex, including high foreign debt, fixed exchange rate flaws, and weak regulation. Economist Joseph Stiglitz, in Globalization and Its Discontents, notes the IMF's austerity measures worsened the crisis. While Song overstates the conspiracy, his warnings about global capital prompted Asian nations to bolster financial defenses, like China's capital controls. 3. The 2008 financial crisis, a modern currency war. The 2008 crisis, post-currency wars, seemed to validate Song's critiques of financial elites. Lehman Brothers' collapse and the subprime crisis plunged the global economy into recession. Song argues it was another case of bankers profiting through complex derivatives. Indeed, the crisis exposed greed and systemic flaws, with firms like Goldman Sachs profiting from credit default swaps while ordinary people lost pensions and homes. Yet the crisis wasn't a single conspiracy but a mix of low interest rates, reckless ratings agencies, and regulatory failures. Economist Robert Shiller, in Irrational Exuberance, points to market frenzy and institutional flaws as key drivers. Song's framework, while insightful, overlooks these structural issues. 4. The Bretton Woods collapse, the end of the gold standard. Currency Wars views the 1971 Bretton Woods collapse as a turning point for fiat money's rise. Song argues Nixon's decision to unpeg the dollar from gold gave the U.S. unchecked printing power, deepening global inequality. He writes, "The end of the gold standard was the start of a new financial hegemony." This has some basis. Bretton Woods tied the dollar to gold and other currencies to the dollar, stabilizing post-war economies. U.S. deficits from the Vietnam War and domestic spending drained gold reserves, forcing Nixon's 1971 decision. Economist Barry Eichengreen, in Globalizing Capital, notes this ushered in a floating exchange rate era, giving central banks more policy flexibility but also risks like inflation. Song's analysis underscores the lasting impact of monetary system shifts, like the 1970s oil crisis and dollar devaluation. Theoretical limitations and insights. While compelling, Currency Wars' framework has flaws but offers valuable lessons. Let's analyze its theoretical limits and insights across 4 areas. 1. Conspiracy simplification and bias. The book reduces financial history to elite conspiracies, ignoring market complexity. Its portrayal of the Rothschilds carries anti-Semitic undertones, criticized as irresponsible. Niall Ferguson notes financial markets result from multi-party dynamics, not single-group control. Yet Song's conspiracy sparked public interest in financial power, echoed in movements like Occupy Wall Street in 2011. 2. Idealizing the gold standard. Song's push for the gold standard overlooks its practical challenges. While it curbs overissuance, it limits crisis response flexibility. Economist John Maynard Keynes, in a treatise on money, argues modern economies need flexible monetary policies for stability and growth. Still, Song's warnings about fiat money resonate, as seen in 2022's inflation surge from pandemic-era money printing. 3. Oversimplified central bank criticism. The book demonizes central banks as elite tools, ignoring their stabilizing role. The Fed's 2008 quantitative easing prevented a global collapse, as Ben Bernanke notes in The Courage to Act. However, Song's call for transparency has pushed public scrutiny, like the European Central Bank's increased policy openness in 2020. 4. Warnings on global finance. The book's critique of financial hegemony highlights globalization's inequalities. Developing nations have limited sway in bodies like the IMF. Song's ideas spurred reforms, like China's 2015 launch of the Asian Infrastructure Investment Bank, challenging Western financial dominance. EI, Modern Lessons from Currency Wars. Despite controversies, the book's reflections on finance offer timeless lessons. Here are 5 key takeaways: financial literacy, policy transparency, investment strategies, global governance, and risk awareness. 1. Financial literacy, understanding the rules. Currency Wars shows finance impacts everyone. Song's historical tales highlight the link between money and power. In 2008, many lost savings due to ignorance of subprime risks. Modern investors like Isabella Warren, a pseudonym for a London analyst, profit by tracking Fed policies and market trends, as seen in her 2020 pandemic gains. Song's lesson: financial literacy protects you in complex markets. 2. Monetary policy transparency, the foundation of trust. The book's Fed critique sparked debates on policy clarity. Post-2008, the Fed's opaque quantitative easing caused market panic. In contrast, ECB chief Mario Draghi's 2012 pledge to save the euro calmed markets. In 2022, the Fed's unclear rate hikes shook stocks, underscoring communication's importance. Song's insight: transparent monetary policy builds economic stability. 3. Investment strategies, the power of diversification. The book's crisis analysis stresses risk diversification. Bitcoin's rise from cents in 2010 to $60,000 in 2021 offered an alternative to currency devaluation. Investors like Andre Cowell, a pseudonym for a Polish programmer, preserved wealth in 2022's inflation by diversifying into crypto, gold, and index funds. Song's lesson: diversified investments shield against uncertainty. 4. Global financial governance, balancing power and fairness. The book's call for financial sovereignty inspired moves like China's 2010 push for RMB internationalization and its 2015 inclusion in the IMF's SDR basket. Economist Raghuram Rajan, in Fault Lines, argues global finance must balance developed and emerging market interests to avoid crises. Song's insight: fairer global governance ensures economic stability. 5. Risk awareness, guarding against systemic crises. The book's crisis warnings highlight systemic risks. Post-2008, Basel III raised bank capital requirements, but derivatives remain complex. The 2023 Silicon Valley Bank collapse exposed ongoing vulnerabilities. Song's lesson: individuals and nations must stay vigilant, as Singapore has, with robust regulation and reserves. 7. Conclusion: seeing finance clearly. Currency Wars is a mirror, reflecting finance's complexity and humanity's fascination with conspiracies. Its vivid historical stories awaken interest in monetary power but draw criticism for exaggeration and lack of evidence. Do the Rothschilds truly control the global economy? Is the Fed a banker's puppet? These questions may lack simple answers, but Song's provocations push us to think deeper about financial systems. In today's volatile markets, we need not blind belief in conspiracies but financial literacy, policy transparency, smart investing, fair global governance, and risk vigilance. Have you ever felt lost in market swings? The wisdom of currency wars might offer a rational guiding light.